Welcome to KNN. KNN is brought to you by Bob Knakal, Chairman of New York Investment Sales at JLL.
Hi, I'm John Hageman, Managing Director at JLL. Welcome to KNN. Today I'm here with Bob Knakal, Chairman of New York Investment Sales, and today we're going to talk about the boutique office investment sales market. Bob, when we looked at the 2019 investment sales numbers, one of the bright spots in the market was office building sales, particularly those under roughly about 150,000 square feet. Can you share with us some of the activity that we've seen in that sector and value and what we've been experiencing and what we think that's going to look like in 2020?
Yeah, Hags, clearly that's a bright spot in the market. Generally, as an overview, the office market has been doing very, very well. Fundamentals in office are great. Look at what the numbers our research department has put out. We see positive leasing activity, positive absorption across the board. It's not just from one sector, it's coming from a number of sectors. So the underlying fundamentals are very strong. And I think that what we saw in the under 150,000 square foot office sales market last year is an all-time record, 1.96 billion of sales volume in that sector last year.
Wow.
That was an increase of about 84% from where we were in 2018, so very, very substantial increase, almost doubling the activity.
Bob, that's dollar volume. What about the number of properties sold?
Hags, in 2019, in the office building sales sector, for properties under 150,000 square feet, there were 32 transactions. That was a great number. It was up 60% from where we were in 2018. And those numbers are relatively positive compared with where the broader market was.
Sure. So
in terms of number of properties sold in the broader market, we were about flat from 2019 to 2018, down about 11% in terms of number of properties sold. The dollar volume was about flat from 18 to 19, but in this subset, the market really has been performing well, and the numbers on the volume side are up across the board.
Bob, it seems like there's been a number of particularly noteworthy sales within this submarket. What do you think, as a result, rather, what's happened with pricing as it reflects that?
Well, pricing is up. We'll get to that in a second, but I think one of the really interesting things is that in that sector, we've had an average price of $61.3 million per trade last year. That was a very, very strong number. It was up about 15% from 2018, and that's the highest average price we've ever seen in that market.
So Bob, now that must have led to you would think, to a very high price per square foot as a result.
Prices per square foot in the under 150,000 square foot sector averaged $1,076 last year, which is an all-time record, and that's up by almost 22% from where we were in 2018. So the market is really doing well. You know as well as I that when we have one of these Class B, Class C properties on the market, particularly if it's a value-add opportunity, there are people coming out of the woodwork to want to buy those.
But why don't you talk about that a little bit for a second, because we've seen such tremendous activity for these type of assets. What's the buyer pool look like today versus what it was maybe 2, 3, 4 years ago even?
Hags, I think that's probably the most interesting thing that's happening in this sector, is that because of the disruption in the multifamily space, and there were more investors in the multifamily sector than for any other sector in the city, a lot of those investors are either going out of New York to buy multifamily, or they're looking at other asset classes. So a lot of those investors have been looking at retail, and they're also looking at office. And if you think about it, if you're a first-time buyer of an office building, you're not going to go buy a 500,000 square foot Class A building. You want to cut your teeth on a smaller bite-sized asset. I think that's why we're seeing so many new buyers, first-time buyers into the office sector coming in, looking at the properties that we have on the market now. Very, very positive sign for the marketplace. And as long as the leasing activity continues, that market is going to continue to do really, really well.